Happy Monday. It's just after 9:30 opening bell. Initially, markets a little rip this morning. We closed at 452 and change on Friday. We gapped higher, and we're certainly on a little rip this morning, 454. It's a big week, to say the least. This week, I just posted, I've got a screenshot here. Let me post this in Discord. Let's go analysis this week. Over 600 companies reporting earnings this week. Also, we have FOMC, ECB, BOJ rate decisions, and the QQ or the Nasdaq rebalancing takes place 7/24. All right. So just looking at some notables here. Before market open, Domino's Pizza. After market close, Cleveland Cliffs, Whirlpool, Spotify, Verizon. It's all Tuesday. General Motors, General Electric, Google, Microsoft, Visa, AT&T this week, Coca-Cola this week, Union Pacific, Chipotle, Meta Platforms, McDonald's, Comcast. We got a mix of large mega cap tech. We have a mix of consumer defensives, if you will. A little bit lower volatility of dividend stocks. Intel this week, Ford this week. So this is really what I think justifies, again, remember that FOMC is on Wednesday. I think this is what, a good earnings week with 661 companies. I think that helps justify, current gains in the market. Expect a lot of volatility this week. I certainly am. And I think we should welcome it with open arms and just be positioned accordingly. So take a look at currency strength this morning. JPY on top with a New Zealand dollar, CAD in the middle, dollar, Swiss, Aussie also in the middle, pound and euro a little bit on the weaker side. Okay, we have a look. Let me log into YouTube and say good morning to everybody. There we go.
After 17 years.
All right. Donna, first in the house. Good morning, Donna. Good morning, Catherine. Good morning, Chris. Good morning, David. And good morning. FK, good morning. Brad, good morning. Ruth Ann, good morning. How is everybody today? Jason, Trish, good morning. Trish, what's happening? Lewis, good morning. Jacob, good morning. All right, nice to see everybody. Let me switch screens here. We know there's risk in trading. You know the deal. This is how you find me out there on social media, youtube.com/Chris Pulver, the Discord channel. I'll share that in the chat in just a moment. Let's get into the charts. Here's currency strength. Here's what I was talking about earlier with the earnings. I posted that in my Discord channel. So 600, I'll just edit this. We have 661 companies this week reporting earnings, plus our rate decisions. A lot of volatility this week expected. This is also one of the last full weeks of trading for the month of July. So coming into FOMC on Wednesday, ECB on Thursday, Bank of Japan is Thursday to Friday overnight, and then we wrap up the month officially next Monday. But curious, of course. I mean, the weekly average trading ranges. Let me go to the weekly chart. This is based on a 10 candle move. The SPY is averaged around $11. It's $11.01. If I change this to the Q, the Q's average for the week is $12.32. So, I mean, we're sitting here at 376. Some way, shape, or form, the high and low on the week somewhere stretches between $11 and $12. So I'm looking to position according to that. Expecting a lot of volatility, bullish or bearish on Wednesday. It honestly doesn't matter. I'm just trying to be positioned for it, protected to the downside. I was able to get a lot of covered calls value added last week. I had several $1,000s in covered calls that were coming in on Thursday, Friday last week, and hopefully there'll be some more to that. If we all of a sudden see brand new highs, 387, 388, this market is probably very keen on just heading up to all-time highs. Now, it would be pretty astounding to see it happen in July or early August. If anything, I think that a pullback is warranted. I think a pullback is probably healthy technically. So looking at the Qs, I mean, having this week be a big red candle would be fine, and then we kind of stall a little bit for maybe August and September, and then we have another kind of Q4 push, which would make some sense to me technically. So, this week if we just pull back, maybe settle in here around anywhere like let's say 340. 340 is pretty solid. A deeper pullback in here at 330 or so. That's still a pretty substantial correction. I mean, last week we had about a 2 to 3% correction, and the market is is poised for maybe some more follow through. There is certainly more downside potential on some of these charts. And excuse all the horizontal lines; those are all chart alarms. Intraday and stuff like that get transferred over to all my charts. But SPY, same thing. I mean, if this is a wave structure, if this is wave 1, 2, 3, I mean, we really haven't had much of a pullback here. So if we have a brief pause or pullback, it would make some sense for the SPY to pull back into, let's say 430 or so. Previous levels here, that's 420. I don't know if we're getting back that deep, but I would say a 3 to 5% correction is probably healthy. I think there's plenty of interest out there to buy more and buy the dip. I think the market remains kind of irrational, but dead set on trying to poke these highs at 475 to 480. So buckle up. I think that's what the mantra is going to be this week. Expecting a lot of volatility. Okay. All right. We good there? Yeah, we're good on audio now. Yes. Okay. Perfect. So lots of companies reported earnings. Like we talked about, let's go currency strength one more time. Like I said, Japanese yen on top and New Zealand dollar, CAD in the middle, Swiss and dollar and Aussie just under baseline. And then we have our pound and euro getting a little bit beat up this morning. Forex Factory, let's go to the entire week. High impact week ahead. So this morning, all PMI numbers coming out of the Eurozone. That's why we have the weaker euro and pound numbers. I mean, everything in red. Wow. So France numbers, Germany numbers, Eurozone numbers, all red. Pretty impressive to all miss Purchasing Managers Index. So getting into consumer confidence on Tuesday, we've had some pretty high readings in the greed factor, the AAII sentiment. It's pushing one of the larger discrepancies, like more bulls versus bears. I think this is the first time since like April of 2021. So people be getting on the greedy side again. And participating. It might be a FOMO, it might be a chase, but it's happening. Aussie CPI coming out Tuesday evening. It's going to be Wednesday's trading day for Forex. Here's your FOMC expected to raise rates. This finally shows up. We were looking at this all last week in the Flex trading room. We didn't see a forecast for the ECB, but you can see it right here. So the Fed is expected to raise rates by 25 basis points. The ECB is expected to raise rates by 25 basis points. We also have advanced GDP at 8:30 for the U.S. See if that's good or bad. Unemployment claims. Press conference for the ECB with Christine Lagarde. BOJ expected to say the same at negative 0.1. Watch the yen cross this week. Trade short term. We'll see what happens when the dust settles on the BOJ. Then we have CPI out of Germany. GDP out of CAD. PCE price index, another inflation print there, 8:30 on Friday for the U.S. So it's a busy week. Let's see here. Interesting. So we're at 376.82 on this. I'm putting air quotes around this rebalancing on the Nasdaq, and let's see if it actually is reflected, before market open or if it's after. If I go to, let me search for a little QQQ rebalance or Nasdaq weighting. Let's see if this changed. So the idea was the top 5 stocks were going to be less than 40%. Right now they were at like 43, or as last week they're at 43. If you sprinkle in, I think it was 7, the Magnificent 7, it was like 53% of the Nasdaq, which is insanely high. You take the top 10 stocks in the Nasdaq, it was almost 60%. Let's see here. Composite measures all weighting values. Let's do this. Is this accurate? 13, 11. This is going to be close. Apple, Microsoft, Amazon. Let's see what those add up to be. This might be a older PDF. 4.72 plus 3.75. So right there, 1, 2, 3, 4, 5. Okay, it's under 40% now. So this is accurate from what the rebalancing was supposed to be. Apple, Microsoft, Amazon, Nvidia, Tesla, and then you sprinkle in again, interesting, like two massive companies right behind, Google and Meta. I'm still going to add those in. They lowered a little bit. So Google is, there's A and C, right? So 3.21 on both. So add in 3.21, 3.21, and then you add in Meta at 2.87. You still have almost 50% with a handful of companies: Apple, Microsoft, Amazon, Nvidia, Tesla, Google, and Meta. 50% of the Nasdaq. So the weighting is still, again, it's rebalanced. It really hasn't stopped these rallies in the past. It was just kind of maybe a bump in the road, or like, oh, what's this mean? Nothing. The last time this happened, I think, was 1998. Market ran really aggressively through, 98, 99 into 2000. So just because we have highs, and I'll say this on the higher time frames, just because we have highs over here does not mean the market has to stop. Okay? In fact, I wouldn't be surprised if, and again, I said healthy if we get a technical pullback. If we have a technical pullback first, I think this next rip is potentially gone. Like, I think the SPY can really make a run to 500, which would put the S&P at 5,000. So just because we have highs here doesn't mean that we should be selling. I think this market, has the FOMO, has the momentum, has the irrationality to run through these levels and, not just go to 470, not just go to 475, 480. I mean, if my target is 500, that's still a pretty decent upside. For any ownership of the SPY, that's another $50 a share, which I'm certainly happy to have that in the portfolio. Okay. And same thing on the Qs, especially if it's, AI led, mega cap, technology led, growth led, right? Pullback is nice. Pullback would be great and healthy, but that next rip could be, through the 400 handle. This is 408, 409. I mean, where do we go? We could look at Fibonacci extensions. We could look at, measuring this move. We can get some fifth wave patterns. 1, 2, 3. Same thing here, right? If this is wave, I mean, this was the low, but 1, 2, 3, 4, 5. This is certainly due for a pullback. Okay, or this is a double bottom, and you start your wave structure here, 1, 2, 3. That's a huge third wave, and then wave 4 would be a pause or correction. Of wave 5, we measure it out again, and this thing is well beyond 400. So just on the bullish side, I just want everybody to understand that the saying is true: the markets can remain irrational longer than people remain solvent. And again, that's if you're in the wrong direction. So obviously, being a market participant, trading what you see, not fighting the momentum, not fighting the Fed, which is obviously not making a ton of sense right now because the Fed is still tightening. And that made sense last year. Don't fight the Fed. What did the Fed do last year? They tightened monetary policy. What's the Fed doing this year? Well, technically they're still tightening, but they stepped in and they basically averted a regional bank crisis. You have very few stocks that are just massively profitable and huge, leading the way with this recovery. You have the market that jumped behind the bandwagon of AI, which is everything, right? Supposedly. I mean, Bitcoin is everything, a few years ago. Blockchain was everything a few years ago. 5G was everything a few years ago. So, I mean, I don't know if AI is going to be the next big thing, which arguably it can be, but it's certainly not new technology. It's just bringing it to the masses. That's really what's going to be important, is the ability for people to use AI or use something that can help make them more productive. We can increase productivity, which is great, but it's not a new knowledge base. It's just a new level of kind of expansion into productivity tools. All right, so that's that. Dollar index. We are still getting a pullback. It's kind of a perfect setup for, where we coming into Fed this week. Fed FOMC on Wednesday. Is it more dollar strength, more dollar weakness? I don't know. There's really, I mean, rarely do I see a big breakdown in price between this DXY and the dollar index, the US dollar here. But if you have a look, the US dollar is holding this low, and this low. So if we continue to see dollar strength, yes, we can see the dollar strength, get above 12,800. But if we see dollar weakness, this thing comes right back down to the lows, right? And that's what I'm not sure of. And that's why coming into this week, it's like I'm kind of dollar positioned to be neutral. I don't have any big commitments. The only thing I'm long on is dollar Swiss. Everything else I've taken profit on short term with this. We were weak on the dollar when this thing was dropping hard 5-6 days in a row. We were strong on the dollar, expecting there to be at least a pullback, and we got it. So a lot of profit protection in the short term the last couple of weeks, and here we are. What's next? I think we'll have to wait and see what happens with Wednesday's price action. How the week closes up on Thursday, Friday, where we're at. But dollar index looks like this support could certainly hold and get back to range highs. It also is July going into August trading. So do we expect to see breakouts? Not necessarily, which is why I could see dollar strength. Dollar strength would technically make some sense right here. Dollar strength would also make sense to help the markets correct a little bit. But the dollar index just had such a dramatic fall that it took out this low, that 100 level was breached. But when I say breached, I mean we got down to like 99.59. So it was more like it was poked versus breached, right? So a poke of that level, but clear support. If it holds, we just head right back up into 103.50 to 104. Right? I had a chart alarm go off for the first time in about a month on Bitcoin. Bitcoin chart alarm 29,176. If we close below this monthly pivot and chew back into this 27,000 pocket area, then this is a failed bull flag. And more than likely, we're range bound here on Bitcoin. So could we head back down to 25 or 26,000? Yep. Could we head back down to 21 to 20,000? Yep. All the above. So I'll be watching this closely again. Dollar index is going to be a big influencer. Dollar strength, Bitcoin probably drops. Dollar strength, oil probably drops. Okay, oil's on the rally, 77.83. We'll see if there's a pullback. There's room. There's room to this yearly pivot at 90 plus. Do I see that happening immediately? No. 375 on the Qs. That means we're heading to the downside. 450 is a big level today. Qs. Just going to keep an eye on these short term. Okay. So I'm going to get my levels marked up here. Looks like we could fill the gap. We're probably going to have some chop trading for today, tomorrow until the Fed gives some more clarity or just how the market's going to react to it. Get this out of the way. So I'll be watching, see if this level holds, see if it breaks, measure the moves for the day. Oil hanging in there at 77.80. Let's check out something like natural gas. $11.30 off the lows at 10.46. Any energy plays? CLF is a steel company. We're at 16. Alcoa is aluminum. We're at 33. FCX is copper. That's at 40. We had earnings on FCX last week. Anything non-US? KWeb, China Tech, sideways. How about Alibaba? Sideways. How about Baidu? Pulling back a little bit. Okay. Just trying to think. Let's look at some sectors really quickly. XLK. This is technology. Technology at 176, expecting a pullback. XLE. I posted this in Discord last week. Energy sector. Energy sector is making a nice little run. If this is sustained, then XLE, if we have an energy sector rip, I would expect technology to drop, and I would expect this to be that potential rotation from growth to value. It could be fast. So, I mean, oil could lead the way. The dollar's going to have a part of this, but, I mean, look, technology has clearly had this great run. If you look at the comparison, I think I posted this in Discord last week. That's Nasdaq rebalancing. This is XLE. This is energy. So we are getting that breakout above. Okay. And looking at some of the correlations here, this was posted on the 20th of last week. So tech and energy showing up in a big way. I mean, your mega caps, your Google, Meta, Amazon, Tesla, Apple, Microsoft, all in red. Oracle, Adobe, right? Big tech companies. What was positive? Healthcare was hugely positive last week. Johnson & Johnson had a big rip last week. And then you go to the lower right-hand side, you see energy in green, utilities in green, basic materials in green, industrials in green. So that would be what kind of warrants this potential comeback. if you compare this on a line graph, if you had a currency strength chart, but it wasn't currency strength, it was actually sector comparison, it's going to look like this. You're going to have, well, I can just show you here. If you do sector tracker and go year to date, okay, all of these that are in green. So your XLK, your XLY, your XLC, all of those are sitting up here, right? If you have like the spaghetti chart, you have those all here. And then all of the other sectors are down here. Okay, all of them. So energy and utilities are starting to show upward potential, and we may see a dip coming in these sectors here. So possibly a bit of a drop coming in technology with a rally coming in energy. I think that's a pretty good play. I've already been positioned for that. So energy and materials, I have some exposure in, and I think that's the undervalued sector right now. So hopefully we'll see more. I mean, year to date, energy is down 3.62, utilities down 2.89. So even if this gets back into green territory, there's growth potential there, right? See a 4% swing, see maybe a 5 to 10% swing. Get this back and see if these will dip a little bit. I mean, 40+% on technology. Does it pull back to 35 or 30% year to date? Doesn't mean it's done. It just means like a pullback's healthy, right? A little bit of rotation. That's all. So pretty wild stuff. CTRA, take a look at that. Yeah, we've had some exposure on this one back in the day. Schlumberger's doing okay as well. Halliburton's doing pretty well. Yeah, this could be a good one. I mean, taking a look at CTRA right here, that's a good one, Donna. Right there. If we have a breakout, this looks a lot like the sector XLE, and we're getting that breakout here. I mean, sure, I could see some potential. 26 to 36, that's not bad. $10 a share is pretty darn good on a $26 stock. That's a pretty nice upside. So yeah, we can take a look at that for class this morning at 10 a.m. for equities on demand. USD weakness. Well, like I said, U.S. dollar index. Let's go dollar here and DXY. It's right back where it needs to be totally neutral. As far as coming into this week with FOMC, I can just see, we have support here, we have support here, we have resistance here. If dollar strength continues, which would warrant a pullback in stocks, dollar gets stronger, stock pullback. Bitcoin probably drops lower, maybe oil dips a little bit, gold and silver probably retreat. Dollar strength influences a lot of these things on the weaker side. Dollar weakness influences this continued rip to the upside. Risk on, stock market goes higher, post Fed probably, right? Energy price. I mean, look, this dollar weakness is going to lead to a rip in energy, a rip in commodities, and most likely a rip in risk appetite. Like I said, I'm wondering about the seasonality. It's July. Do I see us having like these big honking breakouts? Not necessarily. So coming into FOMC this week, I could see the Fed still wants to be very firm and hawkish on their message. I don't think the market's going to believe a word they say if they're going to raise rates again. I don't think the Fed's going to raise rates again. I think they're going to raise rates Wednesday. I think they'll raise rates 25 basis points. This watch tool has not been wrong since 2009, so I don't expect any surprises there. But does anything else change? We have this high probability baked in rate hike coming on Wednesday. Pause, maybe a rate cut in March. So it'd be raise rates higher for longer, pause through the rest of the year, and then it's just the Fed kind of assessing. Where's CPI at? Where's PCE at? Where's PPI at? Where are all these inflation readings? How's the economy doing? Where's earnings at? Right? So it's just kind of hanging in there. But if we start seeing rate cuts, is it because something is broken? Maybe. We still have to watch the bond market, right? But right now it's like equities are certainly outperforming bonds by a landslide. So this week, like I said, I think dollar index is just completely where it needs to be just neutral into FOMC. Technically, if we're going to stay in a summer range, this level of support, this level of resistance, I could see the dollar getting bid this week, causing pullbacks in the stock market. That's because the Fed's message would be hawkish enough to make the market sensitive to it. Okay, it doesn't mean it changes my outlook for the rest of the year. I think these, the indices still go higher. I think that the dollar still gets weaker in the medium to long term. If we're talking dollar weakness into next year, I would expect the dollar index to be at fresh lows, right? I would expect the indices to possibly be at fresh highs. So again, maybe it's all tech led, maybe it's not. But I do think that the markets are bullish enough that there's enough participation coming back from, hey, we went into fixed income and safety there briefly. Now we feel like we're missing out. So there's a lot of that momentum getting thrown into it. But when you see these big sentiment shifts and all of a sudden everyone's super hawkish or super greedy now and super bullish now, I think a pullback is justified. But again, I'm not trying to fight it. I'm just going to trade it, as should you. Okay. All right. It's 10 o'clock. Any questions? It's going to be a busy week. Couple of things. So I'll be in a bunch of webinars this week for a new course that I have called Delta Trader. It's about short-term options trading. I'm doing this stuff a lot, like every single day. So get my levels mapped out, trade some short-term options. It's same-day expirations or typically zero-day expirations, SPY and Qs. Those are the instruments that I like to trade, and it's working out pretty well. It's been, going on 2 months now of live trading. And some of my biggest gains have been over 200% gains on the position. I've had several 100+% gains, had lots of 30, 40, 50% gains. So it's just picking your battles. There's clearly a time to trade in the morning. There's clearly a time to trade in the afternoon. And I don't like to say that trading should be exciting because it shouldn't be. But once you start to grab the methodology here, it does offer some pretty amazing reward to risk opportunities in a single trading day, which I don't get that in Forex. I don't get that in futures. I mean, it's challenging, but I love it. So anyway, I'll be in a bunch of webinars on that this week. And I know Equities on Demand students have seen me sprinkle that into the sessions as well. All right. Any other charts? All good? Okay. So, again, you're all welcome to the Discord group. I'll send an invite here. This will not expire. Copy this. Here's Discord group. Join my Discord server. It's Chris Pulver Trading. There you go. And come on in and say hi. This free group chat is for you to post, share, comment, whatever. My YouTube stuff is just a bot that will, post when I'm live and post any notifications. Blog, I'm posting this almost every single day. Twitter as well. This allows me to be more active in all my little outlets that I've had for the last several years. I just, want to share information and make sure that we're keeping our eye on the prize, which is good trading, good investing. Okay. All right. Thanks a lot, everybody. If you do me a favor, hit the thumbs up button before you go. And I'll see you in classes this week. Flex Trading Room Tuesday, Wednesday, Thursday. Equities on Demand. We'll switch gears, be in there in a few minutes. And Monday through Friday. And then, like I said, a lot of webinars this week through Market Traders Institute with Delta Trader, which is same-day expirations and short-term trading options. Good stuff. No Forex outlook. Well, we talked dollar index. Dollar index is really the big factor this week. So, like I said, we have 3 central bank rate decisions this week. We have Fed on Wednesday, ECB on Thursday, BOJ on Friday. I'm not really having a big outlook because I think it's going to be so much short-term volatility that I just want to see if I can grab some pips. Number one, robots are running in the background. Robots do their thing. But as far as positioning this week, I'll talk more about it on Flex where I'm just looking at direction. But for the most part, dollar, euro, yen, just looking at some short-term opportunities this week. Probably some news trading, around those rate decisions. Friday morning for the JPY, ECB Thursday morning, and then Wednesday Fed afternoon. So don't really have an outlook when I think this week's opportunity is going to be a lot of chop, a lot of volatility, a lot of short term. But should get those markets to move and open up those floodgates a little bit, which is good. All right. I will see you in class, and I'll see you in Discord. Thanks, everybody. Bye.